So we were looking at monetary policy. We had just started monetary policy in the last lecture. We saw that monetary policy authority is Reserve Bank of India. We also saw that it is the Central Bank of India. We also saw that it establishes monetary policy, and there is one key variable in the hands of Reserve Bank of India, which is nothing but interest rate, right? We also saw a few functions of monetary policy authority of India, which is, these are the functions, yes or no? Reserve Bank of India also does one more function which I would like to tell you. It acts as a clearing house. Sir, what do you mean by clearing house? What do you mean by clearing house? Clearing house is, see, when you draw or when you give someone a check, have you made check payments? Your parents must be making check payments. So when that check, you know how it is flowing? You are having a bank account with Axis Bank. You will have Axis Bank ka checkbook, yes or no? You write, I want to pay XYZ person 10,000 check. Uska naam you will write on the check, his name. You will sign it and you will hand it to that person. That person will deposit this check in his bank, maybe SBI. His bank, SBI, will send the check to a clearing house. That clearing house will collect all the checks which are coming from the city, and they will say, okay, Axis Bank account should be reduced balance and SBI should be credited with. Okay? And then it goes to clearing house, and then clearing is settled. And then after 3 days, if you know, after 2-3 days, your account is debited, the one who has given the check and one who has received the payment, his account gets the money. This is the clearing process. So RBI also operates a lot of clearing houses in India. So RBI also has the function of operating clearing houses. So these are known as clearing houses. Clearing means nothing but check aaya, usko clear kiya. You know, you just pass it on, you clear the check. Clear means one account's balance is reduced and another account's balance is increased. Okay? That is called as clearing. Okay? Can I say RBI also works for? Can I say RBI also works for financial literacy of the people? It carries on various campaigns. You don't accept fake coins, and don't believe in fake phone calls which promise you a lot of loans and all. So RBI also works towards financial literacy. What is financial literacy? Financial literacy is what we are doing here also. Knowing about various ways in which money can be saved, knowing about various ways in which money can be invested, not falling prey to fake calls, prank calls, spam calls. Okay? RBI also works for financial literacy, right? These are all the functions, various functions, any number of functions you can add. You can add more 10 functions also to RBI. It's a mammoth organization, various functions. Okay? Then RBI, obviously RBI does a lot of research activities, yes or no? RBI would do a lot of research, economics research and research in other fields. Now very important 14th function I am going to write is, as a very important function. See, how do you agree that we need to provide banking services in each and every corner of the country? Do you agree that we need to provide banking services to each and every rural areas, villages? Why do we need to provide? Why do you think we need to provide banking services? One is their money would be safe. Instead of keeping at home, their money would be safe. That is one, which is okay, which is a very small view of the problem. Second view of the problem is, you always remember they rely on money lenders. In rural areas, there are money lenders, you know, unofficial or unauthorized lenders who charge very high rate of interest. So the local sarpanch would be a money lender, or someone who is very rich in that village, he is very rich, he would be a money lender. So if a farmer from a rural areas wants money, if he doesn't find any bank, if he doesn't find anyone to help him, he will go to that money lender, and that money lender will charge him exorbitant interest rates, 12%, 15%, 18%. Hence, to protect these people, we need, and then you know, there are cases of fake documents and kuch aur bol ke signature le liya, and then so farmer says I never agreed to this, but then he has his thumbprint or signature on the paper. There are many cases like this. Okay, right? So and then ultimately who suffers? Farmers or poor people from rural areas suffer. So to avoid this, we have to open bank branches in rural areas. Every village should have one bank branch. Yes or no? So that they are connected to the financial system, right? But more importantly, this is also the second thing I told about money lending and all. That is also a very small view. The larger view is, always remember, the larger view is, when a farmer instead of keeping money at his home, when he deposits his money in, let's say, SBI bank account, right? What he does is he is formalizing his money. He is bringing his money in the official flow of money supply. And I told you that banks take money from people and banks also give money as loans to people. So this money, so let's say SBI is operating, SBI has 100 crores worth of deposits. It can loan 100 crores worth of money to, it can give loan to others also. Let's say one farmer also deposits his 100 rupees. So now SBI is having more 100 rupees that it can give as loan, yes or no? So in this way, if so many villages are connected together, money will flow in the banking system. And if money flows in the banking system, then money can be given in the banking system, credit can be given in the banking system, from the banking system to those who are in need. And if those who are in need get money at appropriate rate of interest, what will happen? C plus I will increase, your economy would grow. Samjha? If banking system doesn't have money, what would happen? It will raise its interest rate, because we don't have money, whatever money we have is becoming very dearer to us. We will raise the interest rate, and then what will happen? Those who want to borrow, they cannot borrow and their plans are postponed. But let's say if all the rural areas are connected, their money is also flowing in the banking system, which means banks now have more money, they can reduce their interest rate, and those who want to borrow, they can come, they can borrow, they can enjoy. Samjha? This is why we need to connect rural areas to banking system. It is very important. This is the broader view. See, protecting them from money lenders is important. Helping them increase their savings habit rather than buying alcohol and all of that. Rather, you keep your money in bank, you will get some interest also. That is all very good. Those are all good points, but they are very narrow points. The broad point is, think from an India angle. You are mobilizing resources. Do you know first syllabus point of GS3? Indian economy and issues relating to planning, mobilization of resources. You are mobilizing resources from all the rural areas of the country, and those resources can then be put to good use, can then be lent to other people who are in need, they can be lent to people who want to consume, who want to invest, who want to increase the capacity, and that is how your economy can go in the next gear. Samjha? Nahi samjha? Okay? So now how do we do it? There are so many villages in India. How do we open branches in every nook and corner of the city? See, realize that opening a bank branch is very costly, because you need a separate building, you need people, you need manager, you need staff, you need electricity connection, water connection, internet connection you need. It's very difficult. So let's say a village is having only 50 people who are staying in that remote village. So you don't need a bank branch there. Okay? So do you agree that every there is a hub, and then there are small villages. This acts as a city center, district headquarters or something like that. ऐसा होता है ना? There are small villages here, and then there is one one hub, जिकडे market लगता, and when there are shops, within 50 kilometer or 40 kilometer radius, there is one such place. It cannot be called as a district per se, but a small town you can say, and then these would be remote villages, right? So what we do is, in India, we follow a model where what will happen? So instead of opening SBI branch here, we open an SBI branch here, and we send staff of SBI. We recruit more people here. We put 10 times more people here, and we send each and every one of them to these villages with the ATM machine. They have a machine, and we send people here who need to bank to these villages. Instead of opening branch in every village, we open branch in the main town, and then we send people. Okay? How they function is, they have a big register with them. So let's say they go to village A. Village A mein a farmer has earned 100 rupees today. He wants to deposit in his bank account. So he will write the bank person who has gone here. He will write 100 rupees. I have received 100 rupees from farmer Mr. Rajesh, and he will take his thumb or his signature. Now he has 100 rupees. He will go to village B or some other villagers. Now everyone will deposit money with the banker. He will write in register. Now he has cash. He has cash. When he travels back at the end of the day to the town or to the bank, what he will do is, here computers and all are there. He will deposit, let's say he collected 3,000 rupees today from 5-6 farmers. 3,000 rupees he will deposit in the bank, and he will update his accounting records or update his online records. So these farmers who have bank accounts, who have opened bank accounts, their account will reflect this amount which is deposited. So instead of you going to the bank person is coming to you, taking your money and depositing. And if you want to withdraw money, he also carries cash with him. When he goes in the morning, when he goes to villages, he also carries certain cash. See, उनको अंदाजा होता है. They have a fair idea कि how much anyone will withdraw. ठीक है? So let's say on day 1 he collected these many amounts, and one farmer said कि sir, tomorrow when you come, please bring 2000 rupees. I have to make preparations for my son's or daughter's marriage, right? So next time when he goes, next day when he leaves from here, he will take extra money with him, and he will already debit the account here, then only he can take the money. Farmer ka account will be debited already. He will take, it is farmer's money only. He will take his money, he will go. He is just providing a courier service basically. Farmer giving him money deposited in bank, him taking money, farmer's money, and then giving it to farmer. Okay? So he will also try to tell the farmer ki don't spend 2000 on your daughter's wedding, save money. They also have the job of convincing them to save more money so that they are able to use more money later on. Okay? So these people who act as couriers or messengers or service providers of banks, and they go to remote areas, they travel to remote areas, sometimes they even stay overnight also if the roads are not good. These people are known as banking correspondents, BC. These people are known as banking correspondents. These people are also called as business correspondents in some literature which I have read. They are also called as bank sathis. Okay? Did you understand who are they? They are nothing but they provide banking services by traveling. Right? So let's say on day 3 he goes to this village. On day 3 he goes to this village and he finds that there is a family of 5 people. They have decent money. Decent means nominal money they have, but they don't have a bank account. So he also carries bank account opening form with him. Ki sir, you open your bank account, he will take his thumbprint and all, he will take initial deposit of 50 rupees. Then in the evening when he comes back here, he will open his new bank account. Getting it? So this is how banking penetrates in the rural areas of our country. This is how banking systems reach other areas of our country. See, it is not like 4G, 3G, 2G, na, ki you build a tower and then everyone will get the network. Aisa nahi, you need to access each and every village. But you cannot open a full-fledged bank branch in each and every village because they are in remote areas. Let's say someone who is staying in a mountainous area and very steep terrain, there you can't construct a branch. So what you do is you tell people from this town area, bank people, to go there. These are bank employees or these are contractors hired by the bank temporarily. Now you might ask, what if they run away after taking the money? So that is always a risk. But the thing is they are also from these towns and villages only. So there is a lot of trust there. And if they run, they only know that police will come and police will catch them. And see, here the amounts are not big. Bear in mind, here the amounts are very small, 2,000, 3,000, 5,000 in a day. So even if they run with 2,000, they will lose their job for 20,000 rupees. Samjha? So today if they run with 2,000, they will be fired from their job and they will miss a salary of 20, 30,000, whatever they are paid. So normally they don't go. There have been cases of the banking correspondents being attacked also because people know they have money in the evening. There have been cases, so they have security with them. Bank provides security with them. But that is the cost of doing business. Na? That is the cost of taking banking services to masses. ठीक है? समझा? So now 14th is banking correspondence. Did you get it? Banking correspondence. We come to the most important part of our monetary policy chapter. This is the heart of our monetary policy chapter. Ye functions and all these were all initial initial ancillary things. But now we are coming to very important part of our monetary policy chapter. What is the important part here? Do you remember the flow? कहाँ गया वो? This flow you remember, right? RBI gives money to SBI, SBI gives money to us, and SBI also receives from other depositors. ठीक है? So now think like an economist. Assume the role of an economist. ठीक है? Now what will RBI do if it wants to increase money supply in the economy? Will it reduce interest rate or increase interest rate? If RBI wants to increase money supply in the economy, what will happen? It would reduce interest rates. Yes or no? ठीक है? चलो. Let us assume this is RBI. We are starting with the core aspect of monetary policy. This is SBI. This is Axis Bank. This is, let's say, HDFC. ठीक है? RBI is connected with all of them. They all provide loans. They all provide deposit services. You can open your bank account. You can take a loan from them also, right? When they are in help, they go to RBI. When they need help, they go to RBI, and RBI helps them with money. Money flows from year to year, year to year. Yes or no? Very simple, very straightforward. चलो ठीक है. Now let's say SBI wants money from RBI. ठीक है? SBI wants money from RBI. Yes or no? Will RBI give it for free? RBI will not give it for free. RBI will give it as a loan. Are you understanding this? RBI will give loan to SBI. Do you think RBI will charge interest? Yes, RBI will charge interest. Okay? So let's say RBI will charge 5% interest from SBI. SBI will use that money for its own purposes. SBI might need money for it paying its electricity bill, or SBI might need its money for giving out as loans also. That is SBI's prerogative. Okay? Always remember this thing. Always remember this thing. Always remember this thing. Ki in RBI, in banking system, the requirement for cash, the requirement for money are often short term. Sir, I need only for 2 days, I will give your money after 2 days. Okay? The requirement is often short term. In RBI and in banking system, the requirement is often short term. So what happens is that if SBI needs money, will it borrow from RBI? Yes. Can it borrow from Axis Bank? Yes, it can go from. So this transaction we are going to cover in money market chapter. Ki how do they borrow from each other? When they are not able to borrow from each other, Axis Bank says ki I also don't have money. They go to whom? They go to RBI. Okay? Do you think RBI will give money to SBI for free? No, it will charge interest. Yes or no? So that. But do you think it will be a long-term loan or a short-term loan? I just told you it will be a short-term loan because they are in the business of money. So day to day they have mismatches. Samjha? Today SBI has to spend 10 crore rupees, it has 9.5 crore rupees. So it's a very small day to day mismatch. Tomorrow it will have more money and then it can repay back to RBI. So these are all short term in nature. Always remember this, that these are short term in nature. Okay? Okay? Now tell me, if RBI wants to encourage money supply in the economy, would it reduce interest rate or increase interest rates? It would reduce interest rates, right? So if RBI wants to increase money supply in the economy, would it take more interest from SBI or less interest from SBI? If RBI wants to increase money supply in the economy, would it take more interest? Would it charge more interest from SBI or less interest? Less interest. It will say SBI, take money at a very low rate of interest. Yes or no? So do you realize how money supply is being increased by help of commercial banks, by RBI? Okay? So the rate at which SBI borrows money from RBI, the rate at which SBI borrows money from RBI, the rate at which SBI, so money is flowing from RBI to SBI, right? The rate at which SBI borrows money from RBI, the rate at which RBI lends money to commercial banks, we discussed that it will charge interest, RBI will charge interest, is known as repo rate. This is the rate at which RBI gives money to SBI. So who will pay repo rate? Who will pay interest? RBI or SBI? SBI will pay interest at repo rate. That rate is called repo rate to RBI. Okay? Now, question is, Do you think RBI will give this loan without any security, without anything girvi, without anything mortgage? No. RBI will ask SBI, sir, please keep something with us so that if you run away tomorrow, we are able to sell security. Yes or no? So this, you know, whenever you approach bank for a loan and bank asks you ki keep something with us as security, that is called as collateral. That is called as collateral. It is general term, collateral security it is called as. Okay? So collateral security means you have to keep with the bank, the borrower has to keep something with the bank. So people often, people often mortgage jewelry and people often give precious shares or document papers, house owning papers, they keep with the bank and they take the loan. Yes or no? So that is collateral. Now my question is, do you think SBI will have to keep collateral with RBI? Yes. SBI has to keep collateral with RBI. Barabar hai? Simple. The rate at which RBI gives money to SBI is called as repo rate. Now let me tell you the meaning of repo rate. See, repo rate has a lot of different meanings in different books, but just think of it as this way. It is repo rate, na? Repo. You will find 2-3 more full forms of this, but this is the most apt. It is, see this, English, repurchase obligation. Now what do we mean by this? We are going a bit higher level now. Now we are not in basic, issuing currency and all of that is all very basic. We are going into higher level now. What is repurchase obligation? See, actually what happens is, when this, do you think SBI and RBI will sign an agreement? Yes, loan de do. Who will pay interest? SBI. What is that interest called? Repo. Like repo rate pe hoga. So if repo rate is let's say 3%, so anyone who borrows money from RBI has to pay interest at 3%. Is collateral required? Yes or no? Collateral is required. Very good. How the agreement is signed, I am going to tell you. Who is taking money from whom? SBI is taking money from RBI. Who has kept collateral with whom? SBI has kept collateral with RBI. Yes or no? So SBI is telling, I am giving you my collateral, you give me money. After a few days, see, it is always short term. After a few days, I will repurchase my collateral by repaying your loan. Samjha? After a few days, I will repay your loan and I will repurchase my collateral from you. That is why it is called as repurchase obligation. Obligation is SBI has to do it. That is an agreement signed by RBI and SBI. So let's say 10 crore worth of loan is taken from SBI or funds are taken from SBI by SBI from RBI and it has kept a collateral of let's say 8 crore rupees. Then it is under an obligation that after 1 month, suppose, SBI will have to repurchase the 8 crore worth of rupees ka security from RBI and in turn it will have to repay the 10 crore rupees taken from RBI. Do you agree with this? This is called as repurchase obligation. This is called as repo. These are called as repo operations. So when we speak about repo operations, they are usually of a very short time, 2 days, 1 day, 5 days, 10 days, 15 days. Not more than that. See, keep in mind that lakhs of crores of rupees are traded every day in banking system. Our Indian banking system is huge. It is lakhs of crores of rupees. So when they face liquidity crunch or they face the need of money, it is often short term. Sir, give us today, tomorrow I will give you back. It is only for 1 day, it is only for 2 days, sir. Okay? So these are all short term things which we are talking about here. Short term. Repo rate, repurchase obligation rate. Repo rate is the rate charged by dash on dash for money borrowed by dash from dash. Repo rate is the rate charged by dash, charged by RBI from SBI for money borrowed by SBI from RBI and collateral is kept with dash with RBI by SBI. Samjha? Fairly simple. You take loan from banks, yes or no? Do you keep money with banks? Savings account, fixed deposit, we keep money with banks. Similarly, remember this function, always remember this function, banker to banks. Similarly, so can I say when SBI is borrowing money from RBI at repo rate, RBI is acting as a banker to banks? So if loan is given by RBI to SBI, do you think SBI also has the option of keeping its money with RBI? Deposit? Yes. Okay. Tricky question. If RBI wants to suck liquidity out of the economy, if RBI wants to suck the money supply out of the economy, if RBI wants to reduce the money supply in the economy, what do you think? Would it give SBI a better deposit interest rate or a lower deposit interest rate? Think and tell me. Chalo, सोच के बताओ. RBI wants to reduce money supply in an economy, so would it give SBI more interest on its deposit or less interest on its deposit? SBI has deposited money with RBI. We know that. Borrow to pehle kar diya. Now it has deposited money. So if RBI wants to suck out liquidity from the economy, would RBI give a better interest rate to SBI or it would give a very low interest rate to SBI? Think and tell me. 2 minute ले लो चाहिए तो, but सोच के बताना. Think and tell me. This is where learning happens. This is where concepts get cleared. Only unidirectional teaching, I am not a fan of, me speaking, you listening, finish. You have to think also. What is the objective? RBI wants to reduce money supply in the economy. So, and SBI has some deposit with RBI. So, what do you think? RBI will give high interest rate on SBI's deposit or RBI will reduce interest rate on SBI's deposits with RBI? आराम से सोच के बताना. We will take as much time as required, but it is important you get these concepts clear. The next 1 hour is very crucial for our monetary policy understanding. If you don't get it, then you are in trouble. That is why. And questions ऐसे ही आते हैं. In the exam, prelims, questions are asked in this manner only. Whatever I am asking you is on the pattern or is in line with the type of questions asked by UPSC. Everyone should think and tell. सोच के बताओ. Everyone should think and tell. It would? Okay. So lower or higher? This is the turning point in our monetary policy. This is the highest level which we'll study analysis wise. We have to go in depth also. इसके भी आगे बहुत सारी चीजें. There are a lot of things beyond this also, but this is the level which we have to first understand, and then we can go in depth. What does RBI want to do? RBI wants to reduce money supply from here, from economy. Who gives money supply in the economy? SBI, Axis Bank, HDFC Bank. They either give money supply or they remove money supply. But who controls? RBI controls. So now, SBI has an account with RBI, HDFC has an account with RBI, Axis Bank has an account with RBI. SBI borrows from RBI, Axis Bank borrows from RBI, HDFC borrows from RBI. Yes or no? Very simple, because RBI is acting as a banker to the banks. Whatever you do with your bank, these banks do with RBI. Okay? My question is, the aim of RBI is to control or reduce the money supply from the economy. See, if I ask you, what would RBI do with the interest rate? What would you say? Ye chhod do. What would RBI do with the interest rate if RBI wants to reduce money supply in the economy? RBI would increase interest rates because RBI wants to make funds costlier. Yes or no? Now my question is, what would RBI do to the interest rate which is offered to SBI on its deposits? On its deposits, to suck out liquidity from the economy. Think from SBI's angle. Think from SBI's angle. SBI has money. It has two options. It can give them out as loan to people, which means what? It will increase money supply, or it can deposit it with RBI, right? It has two options. Now, what will RBI do to reduce money supply here? RBI will induce SBI to keep money with RBI, yes or no? RBI will say, don't give it out to people, keep money with me. What will RBI do to induce SBI to keep money with itself? Would it increase deposit rates or reduce deposit rates? It would. How? When are you encouraged to keep money with banks when banks offer you 4% deposit rate or 5%? What will RBI do? RBI will increase deposit rates. Which deposit rates? Deposits which SBI has with RBI. So RBI tells SBI, yesterday I was giving you, see these are deposit rates, not loan rates. You have to differentiate between loan and deposit. See in repo rate what did happen? SBI took a loan from RBI. Now we are talking ulta. SBI also has an account with RBI. See, simple hai. Do you have a salary account or do your parents have salary account with a bank? Yes. What do they earn in that account? They earn interest. They earn interest on deposits. Then they can also take a loan from the bank, yes or no? So as a normal person, what would you want? Would you want a higher deposit rate or a higher interest rate or a lower deposit rate or a lower interest rate? What would you want? You would want a higher deposit rate because you are getting money, and you would want a lower loan rate or interest rate on loans because you want to pay low money, yes or no? Similar thing is happening between these two people. Okay? When RBI wants more money sucked out of the economy, RBI will induce SBI to keep more money with RBI. So SBI, instead of giving it here, it will reduce this and it will keep more money with RBI, yes or no? So if SBI was getting, let's say 8% rate of interest here, if RBI gives it, let's say close to 8%, 7%, SBI says this is too risky, repayment hoga, nahi hoga. Instead I keep it with RBI, I am assured that my money is safe. Do you agree with this or not? Simple. Do you agree with this or not? I will repeat it 10 times if you want, but I want you to be clear with these concepts because these are the core of monetary policy. We are now inside monetary policy. We are in the heart of monetary policy now. Okay? So, what is the rate at which RBI lends to SBI? Repo rate. What do you think would be the rate at which SBI is keeping its money with RBI? See, always remember when you keep your money with, so when you take a loan from Axis Bank, who is the lender? Axis Bank is the lender. Who is the borrower? You are the borrower. Who is paying interest, borrower or lender? We are borrower, we are paying interest. Okay? When you are depositing money with Axis Bank, who is the lender? We are the lenders. Always remember. We are keeping money with Axis Bank so that Axis Bank can use that money for its own purpose. We are the lender. Who is the borrower? Axis Bank. Who is giving interest to whom? Axis Bank is giving interest to us for use of that money. Yes or no? Come back to this. In repo transaction, who is the lender? RBI. Who is the borrower? SBI. Who pays interest to whom? SBI pays interest at repo rate to RBI. Okay? When SBI is keeping his money with RBI, who is the borrower? When SBI is keeping money with RBI, who is the borrower? RBI is the borrower. Who is the lender? SBI is the lender. Who is paying interest to whom? RBI is now paying interest to SBI on deposits. Clear? This interest rate is called as reverse repo rate. Oh sir, क्या बात है sir? Reverse repo rate. It is called as reverse repo rate. Did you get what is reverse repo rate? So reverse repo rate is what? Reverse repo rate is the rate at which commercial banks borrow money from central bank. True or false? Reverse repo rate is the rate at which commercial banks borrow money from central banks. True or false? Reverse repo rate is the rate at which commercial banks borrow money from central bank. True or false? It is absolutely false. Reverse repo rate is the rate at which central banks borrow money from commercial banks, or the rate at which commercial banks keep their money with central banks. Okay? So when you are keeping your money with HDFC Bank, always remember you are lending your money to HDFC Bank. HDFC Bank is paying interest on you for that money. When you are borrowing money from HDFC Bank is giving you money, HDFC is the lender, you are the borrower, you are paying interest. When you are keeping it as deposit, you are the lender, HDFC is the borrower and HDFC is paying you interest. समझा? Similar things are happening here. Yes or no? ठीक है? तो this and this is interconnected. ये जितना ज्यादा होगा, more this happens, this will reduce. ठीक है? Now tell me, the more this happens, this would also increase. Yes or no? The more money flowing to SBI, money will also flow here, because SBI, what it will do of the high money, it will lend it out. Are you getting this? So now tell me, final, very clear ही कर देते इसको, खत्म. If RBI wants to reduce money supply in the economy, what will it do with this? What will it do with this? Tell me. If RBI wants to, क्या पूछा मैंने, increase या reduce? What did I ask? Reduce. चलो, RBI wants to reduce money supply in the economy. What will it do with this? What will it do with this? RBI wants to reduce money supply from the economy. It has to reduce money supply. It will induce them to keep it here. So it will increase reverse repo rate. Yes or no? And what will happen with repo rate? It would? Why? It would also increase repo rate, making SBI difficult to borrow from RBI. See, these are not opposite in direction. Just keep this in mind. है ना? ऐसा सब opposite नहीं होता है. That is why I tell you, do not go for rote learning. Think logically. You are RBI, you want to suck money out. So one is, you will increase the flow from here to here, and you will reduce your flow from RBI to central to the money supply. So what will you do? You will make it more attractive for SBI to keep money with RBI. How will you make it more attractive? You will increase reverse repo rate. You will tell ki SBI, I am giving you more interest, you keep money with me. So money flows from here to here. ठीक है? When SBI calls for money, you say ki I am not in the mood of giving you money because I want to reduce money supply here. So what will I do with repo rate? I will increase repo rate also. I will increase reverse repo rate, making it attractive for SBI to keep money here. I will make it difficult for SBI to borrow money from me also. समझा? I will increase my repo rate also, so that it is difficult for SBI to borrow money from RBI. At the same time, I will increase reverse repo also, so that it is attractive for SBI to not lend money but keep it with RBI. नहीं समझा? पूरा डिटेल में. Answer this. RBI wants to increase money supply in the economy. What will it do with repo rate? What will it do with reverse repo rate? Tell me. RBI wants to increase money supply. What will it do with repo rate? It would reduce the repo rate, making it easier for SBI to borrow money from RBI. Chalo, money has flown here. Now what will it do with reverse repo rate? If it wants to increase money supply, it would? This is monetary policy, and this is where UPSC asks questions. Once you understand this, you are through with it. Huh? It would decrease the reverse repo rate, making it unattractive for SBI to keep money with RBI. So what would SBI do? SBI would also lend it out outside. Samjha? So both move in same direction if you notice. What will happen if repo rate is increased and reverse repo rate is decreased? What will happen? Tell me. What will happen if repo rate is increased and reverse repo rate is decreased? First leg of the question, what will happen when repo rate increases? What will happen when repo rate increases? Is it easier for SBI to take money from RBI or difficult? It is difficult because repo rate has increased. So less flow from RBI to SBI. At the same time, reverse repo rate is decreased. When reverse repo rate is decreased, it is less attractive for SBI to park money with. So SBI has difficulty in acquiring money with RBI, and SBI has a difficulty with keeping money with RBI. समझा? So SBI will lend the money out, and the net effect would be money supply पे जो भी होगा. If the repo rate is increased more, then money supply would reduce. If the reverse repo rate is reduced more, then money supply would reduce. Is it clear? We'll go through this once more because this is core. This is very important. Repo rate is the rate at which commercial banks can access money from RBI. See, money doesn't flow for free. Money is always at an interest rate. That interest rate is called as repo rate. So RBI will earn repo rate. RBI is the lender in this case. SBI is the borrower in this case. SBI will borrow short-term funds from RBI at repo rate. Okay, it will keep collateral with RBI and it will say, sir, I need money. RBI says, fine, you can take it at 5% rate of interest. Okay. Now, what will SBI do of that money? SBI will give it out to its customers as loan. Yes or no? Very good. Now, if repo rate is increased by RBI, it makes it difficult for SBI to access funds. If SBI ka funds are difficult, if SBI's access to funds is made difficult, SBI loaning out would be difficult. Yes or no? So today, if you read in newspaper, RBI increases repo rate. What does it mean? Is it becoming easier to lend out or becoming less to lend out? Less to lend out. So can we say increase in repo rate results in less credit in the economy? Yes, increase in repo rate results in less credit in the economy because this is very difficult now. So this will also be difficult. If SBI doesn't have a lot of money to borrow from RBI, RBI is also not giving it money easily. SBI will find it difficult to lend out money. Okay? What will happen if if repo rate is reduced? What will happen? SBI gets easy money and SBI keeps on flowing. So don't think about SBI now, think about RBI. If RBI wants to increase money supply in the economy, it will tell its agents, take all the goods and sell it. Take all the goods at repo rate. I am reducing my repo rate so that it is becoming easier for you to take money from me and supply it in the economy. If I am increasing my repo rate, which means I am making it costlier to for you to access my money, it is difficult for you to access my money. If it is difficult for you to access my money, it is difficult for you to lend out money. Okay? So today SBI is borrowing at repo rate of 5%. It is lending it out. Tomorrow if RBI increases it to 8%, what will happen? SBI will get less money because 8% is too costly, and then if this is too costly, then this will also become costly and this will become difficult. Samjha? Question. RBI wants to increase money supply in the economy. What would it do with repo rate? Increase money supply karna hai, increase. It would reduce repo rate. Why? Because it is making it easier for banks to access funds from RBI and they can flow it in the economy. Okay? Now, if RBI wants to reduce money supply in the economy, what will it do to the repo rate? It would increase repo rate. It would make it difficult. Okay? Come to reverse repo rate. Reverse repo rate is the rate at which RBI borrows from SBI. How RBI borrows from SBI? By asking SBI to keep deposits here so that I can use. आप यहाँ रख के जाइए, you keep your laptop here and go. I will pay you 10 rupees per hour, but I can use that laptop. Yes or no? It is your only, but I am using it. Chalo. If RBI wants to reduce money supply in the economy, what would it do with reverse repo rate? RBI wants to reduce money supply in the economy. RBI wants to reduce money supply in the economy. It would increase reverse repo rate, making it more attractive for banks to keep money with RBI rather than here. ठीक है? Okay. If RBI wants to increase money supply in the economy, what would it do with reverse repo rate? If RBI wants to increase money supply in the economy, it would reduce reverse repo rate, making it less attractive. RBI tells, please don't keep money with me, lend it out. जाने दो. ठीक है? Don't keep here, go outside. ठीक है? So these two are not opposite. Please bear in mind the actions are not opposite always. Think logically. If RBI wants to increase money supply, RBI wants to reduce money supply. Right? Did you understand what is repo rate? Did you understand what is reverse repo rate? Did you understand what is all this? Okay? And these are all short term in nature. Right? Okay. Always bear in mind these are rates of interest. So if I say repo rate is 4%, reverse repo rate is 3%, these are all different rates of interest. Okay? Always remember this. Let us move on ahead. Banks, commercial banks, SBI, HDFC, PNB, etc. Commercial banks, when they call and ask for money with RBI, what rate will RBI charge? Reverse repo rate or repo rate? Repo rate. Will they ask for collateral? Yes. Will RBI ask for collateral? Yes. Now, RBI, when commercial banks call up RBI and say ki sir we need money, RBI asks them ki how much do you need? RBI asks them for how much time do you need? ठीक है? Now you only tell me if a bank is asking for less amount of money, one bank is asking for less amount of money, one bank is asking for more amount of money. ठीक है? What do you think will RBI charge? Will RBI charge repo rate, a lower repo rate or higher repo rate? To which bank? There are two banks. One bank is asking for 200 crores, one bank is asking for 2000 crores. So RBI will charge a higher rate of interest from which bank? RBI has the option of varying repo rates. Two banks come, SBI asks for 200 crores, HDFC asks for 2000 crores. So RBI will quote a lower repo rate to which bank, SBI or HDFC? Or RBI will quote a higher repo rate to which bank, SBI or HDFC? Think and tell. One more layer I am adding now. So earlier it was only interest rate increase, interest rate decrease. Now there are two interest rates, sir, reverse repo rate and repo rate. Now there are two repo rates, sir. What are you doing, sir? तो मैं क्या करूँ? मैंने नहीं बनाया. I have not made all this. Think. RBI will charge a lower repo rate or a higher repo rate from which of the banks? One bank is asking for 200 crores, sir. One bank is asking for 2000 crores, sir. So what will RBI do is, RBI will ask, chalo, let me reframe the question. RBI will ask more questions to SBI or to HDFC? HDFC, it is asking more money. क्या करोगे इतने पैसे का? You know, our parents ask this. When we ask for, sir, parents, dad, I need 1000 rupees. क्या करोगे इतने पैसे? Simple. ठीक है? So, RBI will probe more into HDFC's requirement of 2000 crores. Why will it probe more? It is not that it doesn't trust HDFC and all. They are all regulated, closely regulated and everything. Okay? But what is the risk of giving 2000 crores to HDFC? What is the risk of giving 2000 crores to HDFC? It might flood here. It might flood the money supply. Are you agreeing with this? It might go against RBI's policy. If RBI wants to maintain strict policy, HDFC asking 2000 crores is risky. SBI is asking 200 crores, इससे कुछ फर्क नहीं पड़ता. It is just a drop in the ocean. 2000 crores, let's say it will this thing. So now answer कि it will charge a higher rate of interest from HDFC or a lower rate of interest from HDFC? Higher rate, because always remember high risk, high rate. If the risk is high, you are charged a higher rate. So it will charge a lower repo rate from SBI and it will charge a higher repo rate from HDFC, because HDFC is asking for more funds, because HDFC can pose a risk to this if funds are transferred from year to year, and when they reach here, they might be inflationary to the economy. How inflationary? This is money supply in the economy. If more funds are given from RBI to HDFC, more funds will be given by HDFC to people. If more funds are given by HDFC to people, people will purchase more, people will invest more, economy will grow, yes. But already if it is growing high, then it will lead to inflation, yes or no? Simple. So RBI controls inflation by controlling repo rate, yes or no? So you only told me that SBI and HDFC में higher rate will be charged to HDFC. Okay, very good. Now keeping this discussion in the background for a while, whenever banks need, so RBI will ask one question to both banks, कितने time के लिए चाहिए? For how long do you need? 1 day, 2 day, 1 month, 2 months, how long? They say, sir, overnight. Today give, tomorrow I will repay. Sir, only for today I need money. They say overnight. So RBI, so have you called up customer care helpline and they say press 1 for complaints regarding this thing, press 2 for complaints. IVR hota hai na? Similarly, RBI has different departments which control different requirement for funds. If you need overnight funds, there is a separate department. If you need long funds, little bit long funds, you need separate department. If you are like HDFC, you need more funds, there is a separate department. Agreed? Agreed? So they are known as windows. They are known as windows. No? Ticket mein window hota hai na? First class ticket, if you want to purchase, go to that window. Then if you want to purchase express ticket, go to that window. Simple. Okay? So when the commercial banks approach RBI and they tell ki we need funds for overnight, for 1 day, for 1 night, we need funds, ठीक है, then that window is called as, it's a special window, that window is called as LAF, ठीक है, that window is called as LAF. What is LAF? LAF is, see the name, liquidity adjustment facility. Liquidity means what? Your day to day transactions, उसका adjustment के लिए. So HDFC and SBI both say कि sir we need some money. For how long? You need for overnight. Okay, please go to LAF window. They will give overnight funds. They only give overnight funds. Everything is in RBI only. Everything is in RBI. So anyone who approaches RBI for overnight funds, they are given money under LAF window. Liquidity adjustment facility. What do you think is the interest rate charged? Reverse repo rate or repo rate? What do you think is the interest rate charged? Repo rate. Who is borrowing? Commercial banks are borrowing. It is at repo rate. This is just a window ka naam. I told you that is interest rate. This is window ka naam. Yes or no? This is very easy to understand. है ना? Now HDFC says ki sir I need for overnight but I need more money. ठीक है. Now different banks are of different sizes in India. There are some small banks, there are big banks. So every bank has certain quota allocated to them which they can borrow under LAF. So if it is a big bank, it can borrow up to 10,000 crores, let's say, in a day under LAF. But if it is a small bank, then it can borrow only up to 100 crores. ऐसा सबका है. There is different facilities given. Now if some bank says that it needs more money, more amount of money for overnight only, it needs more amount of money for overnight only, LAF person will say ki sir we are only allowed to give you money up to the limit which you have been sanctioned. If you need more money, go to baju wala window. They will give you more money. Do you agree with this? Up to a certain limit you can borrow from LAF. More than XYZ limit you have to go to another window. See, everything is in RBI only. HDFC will say fine, I will go to another window. That window where more funds are made available. Over and above LAF requirements, more funds are made available over and above LAF requirements is called as, that window is called as MSF. This was introduced somewhere around 2000. LAF was introduced somewhere around 2000. Marginal standing facility was introduced somewhere around 2011. Write this down. We will explain. We will discuss all these things. Okay. Now tell me, if I tell you that this is at, if this is at repo rate, you only told me this is at repo rate, then this will be at repo plus something or repo minus something. Repo plus something because it is, we discussed it will be at a higher rate, ठीक है? So can I call this as a penal rate? थोड़ा penalty लग रहा है because you are demanding more funds because it is more risky for the economy, ठीक है? So this is at repo plus something, yes or no? So LAF rate is repo rate, but MSF rate is repo plus something, repo plus, and this is always a penal rate. Do you agree? Yes, very good. What is reverse repo rate? The rate at which who borrows from whom? RBI or the central bank borrows from commercial banks, or you can say at which commercial banks lend to RBI, or you can say commercial banks keep their money with RBI, anything is fine, right? Do you think they will also demand more collateral here because it is riskier? So more collateral, more rate of interest because MSF window. These are all for short-term liquidity, so don't forget that these are all short-term liquidity measures. Okay? Now third window. Sir, I need long-term funds. What to do? More than 1 year I need funds for. What to do? Go to third window. Now that window doesn't have a name, only has a rate name. If this is repo plus something, then that window has a name of rate which is called as bank rate. This is for long term. Now tell me, would this rate be higher than repo or lower than repo? Would it be repo plus something or repo minus something? It would be repo plus something because it is for long term, it has higher risk. Always remember, high risk, high rate. Okay? So this would be again repo plus something, yes or no? So now pay attention, very crucial part I am telling you. This is also a penal rate, yes or no? RBI, this used to be there. This is extinct now. RBI used to lend short term, this is short term, and long term both. Then RBI stopped lending long term, so bank rate was discontinued. This window was closed, bank rate was discontinued, but since it is also a penal rate, RBI just publishes it, and RBI says ki bank rate would be same as MSF rate because both are repo plus, both are penal rates, but bank rate is not in use now. This window is closed. Please don't forget that this window is closed, and don't say that bank rate is also in existence, but to explain you ki long term lending was also a part of RBI's strategy or policy. This was the rate which was being used, bank rate. So can I say bank rate and MSF rate is the same now? Yes, it is same because both are penal rates, both are repo plus something. Okay? Again twist, new twist. Oh sir, what are you doing? New twist. Due to COVID pandemic, bank again started long-term lending. Sir, क्या बोल रहे हो आप? First long-term lending was there, then not there, now again there. Yes, that is what I am telling. So earlier, window was open for bank rate. You can buy or you can borrow long-term funds from RBI for this thing, and penal rate लगता था because high risk, high rate. But then it was closed because bank said ki this much risk we cannot assume. If you need more funds, long-term funds, then go somewhere else. Where somewhere else, that we'll talk in banking chapter, right? But now because of COVID, funds were required to be given. Banks were also facing a crunch of funds. Achha, coming back to this slide, if SBI borrows funds from RBI, where do the funds normally ultimately go? Borrowers? Yes or no? Ultimately, these are just pass-through entities, yes or no, making profit in between. These are just agents. These are making apna profit in between but passing on the funds below, right? So in COVID, what happened is, do you know that in COVID, lot of businesses stopped? Do you know that lot of people lost their jobs? Lot of businesses shut down because they did not have access to funds, yes or no? So what RBI said is, RBI saw that they are crying here, long-term business people, they saw that they are in trouble here. Okay? So RBI asked banks ki lend them money. RBI asked banks ki lend them money. Bank said, sir, we don't have funds because even banks were in problem. So RBI opened a new window. RBI opened a new window where funds are provided from RBI to banks on a long-term basis to lend it to these people only. To lend it to these people only. Which people? Who are engaged in social service, who have lost their jobs, or whose businesses are shutting down. Micro, small, medium enterprises, MSMEs, small businesses. There are 20 to 23 different categories of borrowers who can get funds from RBI under this special window. So you can say कि a parallel track was created. A parallel track was created from year to year and year to year. Only special funds would flow from here. Okay, only special funds. And these funds were given for long term. These funds were given for long term. And uska the window, just look at the name of the window. Look at the window. This was not there earlier. This is new. Why it is called as targeted? Because it is targeted towards specific borrowers only. A separate track, fast track is created for funds. So bank, if it is coming for asking for long-term funds, RBI will say no, we don't give long-term funds. Bank says ki sir, but I have a customer who has lost, or his business is shutting down if it doesn't get funds. Then bank says, RBI says, okay fine, take under TLTRO. Targeted. Targeted understood, long-term understood, repo operations understood. They are in the nature of repo only, but they are targeted long-term repo operations. So last year in my lecture, this was not there because this facility was not there. Now, very closely related is something else. Very closely related is LTRO. What do you think is the full form of LTRO? Long-term repo operations. Targeted is missing. Now, the difference between TLTRO and LTRO is that RBI realized that specifically targeting these people is benefiting only them, but overall economy की ही वाट लगी है. Overall economy is Overall economy is going down. Yes or no? RBI realized that overall economy, so more people need long-term funds now because they want to restart their business, they want to establish their business, they want to stand on their feet. So RBI introduced another window wherein no specific requirement of or targeting is required, but long-term funds have been started. Now these are all temporary measures for COVID. They might continue even after COVID, they might stop again. So this is targeted and this is non-targeted. So anyone can get funds from banks. Banks can come to RBI for long-term funds. RBI will give under LTRO. If someone specific is coming who has specific healthcare sector and etc., they will fall under TLTRO. These are long-term repo operations. Do you understand repo operations? Nothing but lending of money by RBI to commercial bank. But the difference between repo and reverse repo, repo rate and LTRO is this: long term. Sir, what do you mean by long term? Around 1 year के आसपास, long term. Normally repo operations go for around overnight to 15 days. So that is short term in this case. This will go up to 1 year. Samjha? There are some long term repo operations which also go for 3 years. 1 to 3 years bhi hai isme. There's a lot of variety here. In long term repo operations, it goes around 1 year to 3 years. Then these are all small short terms. Always remember, LAF, liquidity adjustment facility, is overnight. It is just for one night. Write this down. These are the windows through which banks borrow funds from RBI. So which of the 4 are for daily mismatches? What do you think? Which of the 4 are for daily mismatches? LAF. LAF window is for daily mismatches. Okay, we'll move ahead. Question. If government is raising tax rates, is it following an expansionary fiscal policy or contractionary fiscal policy? If government is raising tax rates, is it following an expansionary fiscal policy or contractionary fiscal policy? Contractionary fiscal policy, yes or no? And remember, in fiscal policy, I stressed on the word fiscal. Expansionary fiscal policy, expansionary, contractionary fiscal policy. Similarly, if RBI wants to follow an expansionary monetary policy, what will it do with repo rate? If RBI wants to follow an expansionary monetary policy, what will it do with repo rate? It would reduce repo rate, making it easier for commercial banks to access funds from RBI, which will make it easier for commercial banks to give out funds and thereby increasing money supply. Yes or no? So RBI is following we can say that RBI is following an expansionary monetary policy. So expansionary mein, what happens in expansionary? What happens to the repo rate? What do you think happens to the repo rate? Increase or reduce? Reduce. What happens to the reverse repo rate? Reduce, because it makes it difficult for banks to keep money with RBI or to lend money to RBI. So instead of lending it to RBI, they lend it to people. Samjha? What about contractionary? Opposite. And we are talking about which policy here? Not fiscal policy. We are talking about monetary policy. Okay? Which is increasing money supply in the economy, this or this? This is increasing money supply. So what can you say? In which of these two policies RBI is valuing money more? Money is precious to RBI in which of the following two scenarios? Money is precious to RBI. So in one scenario, money is very precious to RBI. In one scenario, RBI is not affected by money. RBI is like, enjoy. So money is precious in contractionary because RBI doesn't want money to flow out. Okay? It is like us. We have a lot of precious things we don't want others to know. And expansionary is lelo, enjoy. They are not that precious, right? So we have some words for it. This is not applicable in fiscal policy. This is specifically applicable in monetary policy only. So you can tell ki by nature it is similar, but these words are normally used in monetary policy. So can I say RBI is valuing money more here or more here? More here. So in expansionary policy, RBI is like, enjoy, take, yes or no? RBI has reduced everything, money has become cheaper, yes or no? So this is called as a cheap money policy. Cheap money. Samjha kyun? This is called as a cheap money policy. Because RBI is like, take it, we want to expand. And this is called as a dear money policy. बहुत प्यारा है money RBI को. Money is very precious. It is called as dear money policy. Something is very dear to me, which means I love that thing, which means something is very precious and I value that thing. So here in the first case, RBI is not valuing money. RBI is telling enjoy life. Okay? So when we get a job of, let's say, 3 lakh rupees per month, if someone is asking us a treat, we will say enjoy. Kya hi tu? Le le, hai na? But this is also true in many scenarios. Yes or no? Someone asks vada pav, then that time also we don't give sometimes, especially especially in school and college. If someone asks us for vada pav, we say ki we only don't have money. What we'll give you? So contractionary. Repo rate is also increased, making it difficult for banks to borrow. Reverse repo rate is also increased, making it difficult for banks to lend it out to people. So banks keep it with the RBI or central bank. So here what happens is, what is the effect of this and this? What is the effect? Money supply increases or reduces? Money supply increases. What happens to inflation? Inflation also goes up because money supply is more, purchasing is more, everything is more. And here what happens? Money supply reduces and inflation reduces. Okay? So now again, we'll stretch it further. Where to use this? Which scenario to use this? When the economy is growing stage or lowering stage? When to use this? When to go for expansion? When the economy is growing or economy is reducing? When the economy is reducing. Remember counter-cyclical, he spoke about fiscal policy, but even in monetary policy, we want counter-cyclical only. Okay? So suitability is what? Reducing growth, I can say generic. When growth reduces, in case of reducing growth, you have to follow this policy. And in case of inflation, high growth or inflationary growth. Samjha? Now clear picture of monetary policy. Okay, we also know that repo rate plus something is also there. So if I ask you if RBI has increased the marginal standing facility rate, then what do you mean by that? Is RBI following an expansionary policy or contractionary policy? RBI has increased the marginal standing facility rate. Then what does it mean? Are we following an expansionary policy or are we following a contractionary policy? Contractionary, because it is nothing but repo rate plus something. Na? So it is as good as increasing repo rate only. So RBI does that only. See how RBI has set rates are that marginal standing facility rate is dependent on repo rate. So if repo rate increases by 2, marginal standing facility उसके ऊपर जाएगा. Simple, very straightforward, very easy. ठीक है? If RBI increases targeted long-term repo rate, what does it mean? Contractionary policy. Right? So often what happens is, when government reduces tax rates, government also wants RBI to reduce interest rates. तो ही वो effect होगा ना on the economy. When government reduces tax rates, you are giving more purchasing power to the people. Government says कि what I am doing is not enough. You also have to reduce interest rates so that they have more purchasing power plus more borrowing power. And then we can kickstart the economy. Then we can take the economy higher. समझा? See, this is the heart of monetary policy. This is the core. This one slide, it is the core of monetary policy. The rest everything are just details. Monetary policy will be over in the next lecture. Next lecture mein monetary policy will be over. We'll start with inflation or banking, whatever is convenient. We also have to go to fiscal policy once. We have to go back. We have to see Finance Commission recommendations. Remember, Finance Commission recommends how much is to be transferred from center to state, alternate scheme of devolution we spoke about, vertical horizontal devolution. It also recommends, I had told you in fiscal policy, in revenue receipts and revenue expenditure, it also recommends how much grants are to be given. Devolution to hai, but grants also are recommended by Finance Commission, so that central government writes those grants in revenue expenditure and state government writes those grants in revenue receipts. Now quickly tell me, what happens if revenue grant is grant is given by central government but used by states for creation of capital assets? What do we get, or what is it useful for? Effective revenue deficit, barabar. So this is how you try to challenge yourself somewhere in between, randomly take a word which you have learned and try to remember what it meant. For example, tax buoyancy, fiscal stimulus, consolidation, GVA method, demerit goods, non-merit. There are so many concepts which we have learned, right? So try to recollect, and this so you have to practice without by hearting this. If you by heart this, now I will come to your home and then I will tell you you are doing it wrong way. Okay? Some of you stay in Delhi only, you have told me. At least those people I can come. Done? Chalo. Let us move on to the next part. Very interesting part. Let us move on to the next very interesting part. Since we have learnt about GST tax rate cut transmission today only, we are going to learn about something else. Now tell me, very important. Now tell me, very important. If RBI is reducing repo rate, what does it indicate? If RBI is reducing repo rate, what does it indicate? A cheap money policy or a dear money policy? Cheap money policy. If RBI is reducing the repo rate, what does it indicate? The cost of funds to banks is increasing or reducing? The cost of funds to bank is reducing because they are able to borrow at a lower cost. Similarly, they will be able to lend to people at a lower cost. Remember GST? Remember GST? GST tax rate cut by the government but not passed by the seller to the customer. Same thing happens here also. Banks do not pass on rate cuts to the people. Banks are also like that. See, this is how we try to study. We try to draw parallels between things, right? And since we have covered GST rate transmission today, we are going to learn about monetary policy rate transmission also today. Okay? Are you getting it? Repo rate reduced, but not reduced by SBI. Rate not reduced. So I'll tell you how it works. What is the process? So whenever you go to a bank to take loan, whenever you approach a bank, sir, I need personal loan, sir, I need car loan, sir, I need XYZ loan, they give you a rate of interest, right? 8%, 9%, right? How do they calculate their rate of interest? See, don't think of banks as some complex institutions. Think of banks as they are selling money. They are getting money from somewhere, they are packaging it and they are giving you money. Simple. So what do you think is the raw material cost of loan? What do you think banks have to pay as input cost? Where do you think banks get their money from? Either from other depositors or from RBI. So can I say repo rate is a cost of banks? Or the interest which is paid at repo rate is the cost of banks? Yes or no? Okay. So I will tell you 3 scenarios. Okay? Scenario number 1, scenario number 2 and scenario number 3. 1, 2, 3. Have you heard of cases where you know the bank manager or bank manager knows your family, pehle se they are family friends. So if you are a family friend, then there are chances that he might quote you a lesser rate of interest also. See, banks have a freedom. Bank managers especially, they have freedom to quote lesser rate of interest. See, ultimately rate of interest is nothing but the price which the bank quotes you for your loan. Okay, so it is in the hands of banks only. So let's say you go to Axis Bank and HDFC Bank, both quote 9% rate of interest, but you know the manager of SBI Bank, SBI. So you say, sir, please. So he says, I will try what will happen, and he quotes you, let's say 7.2%. So wo favor ho gaya na? It is like a favor. So in this way, a lot of corruption used to happen. See, always remember that bank managers' salary is dependent on loans given or new accounts opened. Okay, their salary is dependent on it. So to increase their loans given, to increase their performance, they will give loans at lower interest rate also. See, if you give interest at low or loans at low interest rate, you will get more customers. Yes or no? So this used to happen on a very discretionary basis. Jiska setting hai, the one who is well connected, the one who has setting, he used to get interest at low cost, and then others used to get interest at high cost. See, always remember crowding out. Okay? So if you are giving a lot of your setting wale people a lot of money at low cost, what will happen to other borrowers? They will have to borrow at high cost, yes or no? because less money will remain with you. So you will obviously, law of economics says that you will increase your prices. So crowding out used to happen, and ultimately who suffers? Small borrowers suffer because they don't have that pehchan and they don't have that setting. Okay? Even if you don't have a setting, but if you tell the bank, I want to borrow 500 crores, it is a business of 500 crores for banks. Banks, the product which they are selling is money. So they are able to sell you 500 crores worth of money. So they will welcome you. They will say, sir, chai pijiye, sir, what you want? Coffee, cold drinks, chai, French fries you want, sir, what you want? Pakoda you want? It is raining, sir, have samosa, right? But if bank gives 10 such people low rate of interest, the 11th people, if I go there, I as an individual, I am a very small person, if I go there, they will not even offer me water. They will say ki 12% pe lena hai to lo, varna jane do. They will increase the rate of interest. Why? Crowding out has already happened. In fiscal policy, we saw crowding out by government. Here we are seeing crowding out by other private big borrowers. But they are big, yes or no? So this was the earlier regime, when this discretion used to happen a lot. So we can say in the first scenario, bank is using discretion. Who is suffering here? Who is suffering? Small borrowers. ठीक है? RBI saw all this. This was earlier. RBI saw all this. RBI said कि ये नहीं चलेगा. This will not work. We have to protect the interest of borrowers. Yes or no? We have to protect the interest of the investors, like the borrowers, the people who are borrowing money. We have to protect them. Chalo. One say second pay. So RBI then introduced something called as a base rate regime. Base rate. So let me write it. RBI introduced something called as a base rate regime. See, as the name suggests, this is not basic price of GV and all, that is completely different. As the name suggests, RBI said, banks, you cannot lend to anyone below this rate. Simple, khatam, finished. Uske upar whatever you want to play, you play, but you cannot lend to anyone below 8%. Uske upar if you want to charge 10%, 8.1% se leke 20%, you have your own freedom. But RBI said you cannot charge anyone below 8%. Now, why lending below the rate of interest is harmful for the economy? We have just seen one reason, which is small borrowers suffer and crowding out happens. But major reasons we are going to see in banking chapter. So in this chapter we are thinking from RBI's angle. In banking chapter we will think from commercial banks angle. Ki sir, RBI is not giving money, we are squeezed for money, where will we do business? We will see all of that in banking chapter. Okay, interesting. Base rate regime. What does base rate regime says? Below this, no lending. Samjha? ठीक. How do you calculate your selling price? How do we calculate normal selling price of our product? We take the cost, we add our profit, and we calculate selling price. So same thing banks did. Banks calculated cost, banks calculated profit, and banks said ki this would be my lending rate. Yes or no? Lending rate, base rate. What is the cost here? What is the cost here? Is it repo rate? Yes. ठीक है? Problem. RBI reduced this, banks increased this. Are you getting it? RBI reduced repo rate, banks increased profit. Base rate remained same. RBI बोला अरे कैसे चलेगा? How will this work? I said 8%, today I am saying 7%. They say, yes sir, repo rate reduce, our profit increase, base rate remaining same. RBI said, something is wrong. मैं कितनी मेहनत कर रहा हूँ, I am doing so hard, I am working so hard, but you are not following this. ठीक है? Base rate also failed. Can I say base rate system failed in monetary policy transmission? Can I say base rate system failed in the decisions of RBI being transmitted to the customers? Yes, because customers got it at this rate only. Banks increased profits. Who increased profits? Banks. Banks increased profit. So the aim is to achieve transmission of rate cuts which are done by RBI, and the benefit should be transmitted to customers. Similar to GST. GST 18 se 12 hua, but customer should pay less na today. Similarly, if RBI cuts repo rate, ultimately for what it is doing? To repo rate it is cutting to follow an expansionary policy so that people get more funds at low rate of interest. but here people are getting at the same rate of interest. If earlier you are not able to afford a loan at 9%, today also if bank is telling you 9%, you will not be able to take that loan. So monetary policy transmission is not happening, yes or no? Then came third regime, which was introduced in 2018. Not 18, 17. We have a fourth regime also. So ye chart, this is going to be, we have to, shift this chart a bit. Because there is fourth regime also here. Okay. Fourth regime came in 2019. 18, 19. Third regime came. So, this is called as a base rate regime. Huh? This is fine, this is ignored, this is very old. Base rate should be known, and now third rate. What RBI said is that, now pay attention, this is maths and stats. Basic maths I am going to tell you, I am going to ask you basic maths. Every day, 5 tests pe, you attempted 5 economics tests. Test 1, test 2, test 3, test 4, test 5. Okay? In test 1, you got 70 marks. In test 2, you got 70 marks. In test 3, you got 60 marks. In test 4, you got 72 marks. In test 5, you got 75 marks. Okay? If I ask you what is your average marks, what will you do? You will add this all and divide by 5. Will it come somewhere around 70s only? Somewhere, because ye bhi 70 ke paas hai. I am just assuming. It will come somewhere around 70. Okay? Now, you gave test 6. You got 90 marks. This will shift towards 90, but kitna? Thoda sa. Why? Because all others are near 70. Okay? Imagine you are giving 100 tests and the 101st test, so 100 tests you gave and your average of 100 tests comes to 70 marks. You gave test number 101 and your marks are 150 now. Okay? From test 1 to 100, this is maths. I am taking you to maths now, because to understand the third regime, we have to understand maths a bit. For the first 100 tests, you scored somewhere around 70 or averaged 70. For the 101st test, you scored 150. Now, what do you think would be the average? So, what you will do, 70 into 100, because 100 test ka 70 mila hai aapko, plus 101st test pe 150, divide by how many tests? 101 tests. Okay? What is the answer to this? 850 divided by 101. How much is it? 850 divided by 101. 86, 87 कितना है? हाँ कितना है? 8.4. हाँ नहीं ये 7000 होता है ना? Sorry. So 7000 plus 150, 7150 divided by 101. Sorry. 70.77. 79. ठीक है. 70.79. ठीक है. Your 100 scores performance still remained near 70 only, even after you scoring very high double marks in the 101st test. Yes or no? Why this is happening? Because of averages. Because your 100 tests are moving around here, so one test will not make any difference. समझा आपको? Do you understand this thing? Now we move on to the this thing. Okay? Now what we do is, I would write a word here, average cost. Okay? So bank is borrowing from RBI at various days, on various days, during various times, sometimes 10 times in a day also. Okay? So the average cost bank calculates ki average mera cost is itna, which is my repo rate, plus profit, and this is my base rate. Okay? tomorrow, let's say today SBI borrowed 10 times from RBI at 11%. What do you think would be the average? 11%. Tomorrow, so SBI took 10 loans from RBI and at 11%. Tomorrow, the 11th loan, RBI has reduced repo rate, 11th loan is at 5%. What do you think would happen to the average? It will move little bit below 11%, 10, 9 के आसपास आएगा. We saw it moves only little bit because of law of averages. So many are consolidated near your one figure that one drastic figure will not make any difference to it. ठीक है? So what would happen to this cost? It would reduce by 11, say it would happen to 10%. ठीक है? Then, so RBI said, when I reduce repo rate, use the new rate, don't use the old rate. Which means RBI said, don't use. SBI borrowed money from RBI to give it to people. Okay? So at 8 o'clock, SBI borrowed at 11%. At 12 o'clock, SBI borrowed at 12%. Then at 11%. Then at 11.5%. Then at 10%. Then 11%. Okay? What would be the average? Around 11. Which will be counted here. Yes or no? Simple. Next day, RBI reduced repo rate to 5%. क्या होगा? What will happen? इस पे 5 add हो जाएगा. इस पे 5 would be added, and then average would be taken of all these loans. This will not move by much. This will go to 9.5 or 10%. ठीक है? RBI said tomorrow if I am reducing repo rate, then the loans which you give tomorrow cost at 5% and don't take average cost, because your previously the repo rate was high, so previously your average is high. So for new loans, start afresh. So for the 101st test which you give, count only the new score, don't count the earlier average score. समझा? ठीक है? So now what RBI is saying here is, RBI is telling you, don't take average cost, but take new cost for the new loan. Yes or no? ठीक है? Do you know the meaning of the word marginal? Marginal means of one additional unit. For example, if you score 70 marks in 100 tests and if you score 150 marks in the 101st test, then the marginal marks you have scored are 150 because you have scored additional new marks are 150. So RBI is now telling you don't take average cost. RBI is telling take marginal cost, which means कल का loan कल का repo, not earlier repo rate का average. Don't take earlier repo rate average. Tomorrow you are borrowing at 8%. Instead of 10%, you are borrowing at 5%. Then only take 5% in your loan counting. Don't calculate earlier average. Okay? So take marginal cost. But please keep profit as fixed as last time. Nahin to banks will increase this also, right? So they introduce changes. Ki whatever profit you are booking on earlier loans, book the same. But when repo rate is reduced, take marginal cost and don't take average cost. Are you getting this? This is maths. Okay? Now this would be at repo, obviously. At new repo, it can increase, it can reduce. Yes or no? It can increase, it can reduce. Plus profit. Now this becomes your lending rate. Okay? This becomes lending rate. Yes or no? Can I call this as my lending rate? Right? I'll just move it. This was given a fancy term. Pay attention here. Pay attention to the term. This was given a fancy term. Instead of base rate, it was called as MCLR. Sir, what is the full form of MCLR? Now look at the English, whether you understand or not. Look at the English. Marginal cost of funds. What is the cost of funds? Repo rate. Cost of funds is nothing but repo rate for the bank. Marginal cost of funds, which means the additional new repo rate, new cost, Take the new cost, don't take the old average. Marginal cost of funds based lending rate. Your lending rate which you are quoting to the customers should be based on marginal cost of funds and not average cost of funds. And this is the third regime which was started in 2016-17. Okay, this is the third regime. Did you understand? Your average was taken. So naya, even if tomorrow RBI reduces the repo rate drastically, average will not move much because already bank has borrowed at old repo rate at huge amount. So RBI said keep new rate, new cost, keep your profit same and then quote MCLR to the customer. So now what is happening? Now what is happening is, if RBI reduces repo rate, this reduces instantly, this is same, this reduces instantly and hence it is called as marginal cost of funds based lending rate, MCLR. Samjha? Banks found ways around this also. So in this cost, there is other cost also, lighting expense, salary. Banks started showing higher salary, which increased their cost, profit same, but MCLR higher. Samjha? Then we come to fourth regime. RBI bola I give up, mujhse nahi hoga. Then we come to the fourth regime, but there is no place for the fourth regime. Okay, we'll write the fourth regime here. Are you getting this? So is monetary policy transmission more in this or this or this? Monetary policy transmission is more in this or this or this. Monetary policy transmission is more in this. It is still, banks are doing some things, but still it is more in this compared to this, compared to this. Yes or no? What do you mean by monetary policy transmission? What do you mean by monetary policy transmission? Monetary policy transmission. What do we understand by the term monetary policy transmission? The effect of rate changes, the effect of repo rate changes, the effect of rate changes on the final loan or the final rate which is being given to the consumer. So if tomorrow RBI reduces the repo rate, is the benefit of reduction in rate passed on to the consumer. If RBI increases the repo rate, is the increase in repo rate passed on to the consumer? Yes or no? Samjha? It is same like GST rate transmission. If GST rates are reduced, does the consumer have to pay less or is it the same? Are the middlemen eating away all the rate reduction? Similarly, in monetary policy transmission, when we talk about RBI reducing interest rates, we talk about RBI reducing repo rate, but the benefit should also be given to the consumers. The bank should not eat in between. Samjha? Is this clear? That is monetary policy transmission. So when we say monetary policy transmission is not happening, it means RBI has cut the repo rate by 2%, but banks have cut the lending rate less than 2%, which means monetary policy transmission is not happening properly. Samjha? This is the scenario. If we say monetary policy transmission is happening properly, which means RBI has cut the repo rate 3%, consumers are also getting loans today at 3%. Okay? So fourth is में RBI said I give up. RBI then brought in the regime of linking to external benchmarks. ये क्या होता है sir? I will explain. What do you mean by linking to external benchmarks? So RBI said that some of the loans, not all. So can you tell me which of the loans are rate critical, or where is even 0.5% reduction in rate very crucial? Loans by small people, उनके लिए rate is very critical. See, if Tata is taking a loan, 9 and 9.2% will not make a difference, but 9 and 9.2% makes a lot of difference for a farmer. ठीक है? Home loans, especially affordable home loans, low cost home loans, right? For them, for home buyers, first time home buyers, rates are very critical. So for MSME loans, MSME is micro, small, medium enterprises. They are small enterprises. Though loans which are given to MSMEs, loans which are given for small home buyers and all, link them to external benchmark. Matlab, forget this. If repo rate is 10%, give them loan at 10%, ऊपर थोड़ा profit चढ़ा दो. Just you can use your own profit here, but link them. So tomorrow if repo rate reduces immediately, you don't have to do all these complex calculations. 9% plus profit khatam. Tomorrow 12%, 12% plus profit khatam. Whatever, when you go to the bank, what is today's repo rate? You see on RBI website, quote me this. Bank will say RBI repo rate 12%, I will quote you 12.5 because 0.5 is my profit. Commercial bank will say khatam. External benchmarks. These are called as external benchmarks. समझा? ठीक है? Now what are these external benchmarks? Which external benchmarks are we talking about? There are various external benchmarks. ठीक है? There are various external benchmarks which we talk about. What are treasury bills? Can anyone remember what are treasury bills? Try to recollect what are treasury bills or T-bills. What are treasury bills? They are issued by government when who borrows? When you borrow or government borrows? Government borrows, treasury bills. Okay? These treasury bills, are they without interest or with interest? They will be with interest because when you buy a treasury bill, you expect interest, yes or no? The lender always expects interest. When you buy a treasury bill, who is the lender? Government or you? You are the lender, government is the borrower. So you will obviously expect some interest which the government will pay. So all treasury bills, like I told you, they have the name of the borrower, name of the lender, they have interest rate, rate of interest, yes or no? So these external benchmarks, RBI said ki link them with. This is now the interlinking between fiscal policy and monetary policy. We are coming into convergence now. So there are, RBI said to banks ki you choose which benchmark to be chosen. You choose kahan se link karna hai, right? So you can either, we will talk about treasury bills later. So treasury bills are of different durations. Maturity period hota hai na, 5 years, 1 year. Treasury bills are short-term instruments, so they are usually less than 1 year. So there are different kind of treasury bills. Treasury bills which mature after 91 days, which mature after 182 days. We'll speak about it. So external benchmarks mein RBI said ki either link your loan rate to, and these rates change every day. These rates change every day. Link your loan rate to 91-day treasury bill rate. 91-day treasury bill rate means the bill will expire after 91 days. Remember, we are talking about short-term funds. So, or link your this thing to 182 days T-bill rate. We are yet to speak about treasury bills. It will come in monetary policy only. But since we are covering the different regimes, we are here. Or there is an organization which takes into consideration all the cost of banks, which takes into consideration all the cost of funds which are flowing in the country. So basically they do costing of calculation of interest and all. So rate set by them, rate set by that organization is called Financial Benchmarks India Limited, FBIL. Rate set by FBIL. Rates set by FBIL. Financial Benchmarks India Limited. I'll write it down. Rate set by Financial Benchmarks India Limited. Right? And what is the most obvious linkage which RBI will give? Like the most obvious option RBI will give, ki link it with 91-day treasury bill rate or link it with 182. What do I mean by 91-day treasury bill rate? It means the rate of interest which is printed on the 91-day T-bill. So link it with that rate, or link it with this rate, or link it with rate set by FBIL, and fourth and most important part, or link it with repo rate. डायरेक्ट कर लो, टेंशन ही नहीं. लिंक इट विद रेपो रेट. डायरेक्ट फाइनल, खत्म. Okay, so these are the options. We'll speak about Financial Benchmark India Limited now, but before that, before going to FBIL, I want to revise whatever we have done till here, so that things are easier, things are clearer, right? If RBI wants to follow cheap money policy, what it will do with the reverse repo rate? Think. If RBI wants to follow a cheap money policy, what it will do with the reverse repo rate? Think. RBI wants to follow cheap money policy, which means RBI wants to increase money supply in the economy, which means RBI would make it less attractive for banks to keep money with itself, with RBI. Hence, RBI would dash reverse repo rate, reduce reverse repo rate. Why? When RBI reduces reverse repo rate, banks find it less attractive to park funds with RBI and more attractive to give out the funds away to the people as loans, and hence more people have more access to funds. Hence, the goal of cheap money policy is successful. Okay? If RBI wants to follow a dear money policy, what it will do with MSF? If RBI wants to follow a dear money policy, what will it do with MSF? Dear money hai, okay? It will make it difficult for banks to borrow, so it will increase MSF. MSF is nothing but repo rate plus something. So whenever you see the word MSF, just keep in mind that it is nothing but repo rate plus something. So it goes in the same direction as repo rate, right? If RBI wants to follow cheap money policy, what will it do with the base rate? What will it ask banks to do with the base rate? Reduce base rate or increase base rate? Reduce base rate so that loan is available at cheaper cost to others, so that loan is available easily to others, right? If RBI wants to ensure higher monetary policy transmission, okay? If RBI wants to ensure higher monetary policy transmission, then what will it encourage banks to do? Will it encourage banks to link to external benchmarks, or will it encourage banks to follow MCLR regime, or will it encourage banks to follow base rate regime? Benchmarks, because this is directly linked to repo rate. ये calculation भी करने की जरूरत नहीं है. So monetary policy transmission is the highest in benchmarking, external benchmarking, little bit lower in marginal cost regime, and lower in base rate regime, and no linkage with and no transmission in discretionary regime. समझा what is monetary policy transmission rate? What is Laffer curve? क्या था? कुछ देखा था हमने Laffer curve. Did we see something about Laffer curve today? Something we saw. कुछ तो देखा. क्या देखा? उसने जो देखा किसी ने नहीं देखा. What did we know about Laffer curve? Laffer curve shows the optimum tax rate at which tax collections are maximum. Yes or no? Because beyond a point of time your tax collections would reduce. Why? Because people will try to avoid taxes, evade taxes, and they will go out of the tax net. Yes or no? Tax net, tax base. We have seen all those things. ठीक है. What is not happening? What is not happening if GST is increased on a particular product? If GST is increased on a particular product and the seller does not pass on the burden on the consumer. See, when GST is increased, burden is increasing. But if the seller is not passing on the burden to the consumer, what is happening? In case of what is not happening? GST rate increased, seller did not pass the extra burden to the consumer. What is not happening? GST rate transmission is not happening. See, transmission can be negative and positive both. Rate cut ka bhi fayda has to be passed on to the consumer. Rate increased burden has to be passed on to the consumer. If you do not pass the rate increase burden, then you are suffering. I mean, you are only telling ki I will pay more. You are shopkeeper, yes or no? You are the dealer, right? Now think and tell me. What will happen? What will happen? Will money become dearer or will money become cheaper if rates set by financial benchmarks increase? What will happen? Will money become dearer or will money become cheaper? See, nothing but your loan rate is dependent on this rate. If this rate increases, your loan rate increases, money will become dearer. Yes or no? But this will happen directly. This happens indirectly. This happens more indirectly. So your transmission is clear. Point I am trying to make, transmission goes both ways. Higher rate should be passed on to the consumers. Lower rate should also be passed on to the consumers. Higher rate passing on to the consumers will result in what kind of monetary policy? Expansionary or contractionary? If these guys increase the rate, and if a loan is linked to this rate directly, then will it be a case of expansionary monetary policy or contractionary monetary policy? It will be a case of contractionary monetary policy. Why? Because loan is getting costlier. It is getting difficult to get loan because these guys have raised the interest rate, and because my loan rate was linked to them. Okay? So if tomorrow you go to a bank and bank says we are offering you loan according to rate set by FBIL, you say fine, today 7.5%. Tomorrow you go to bank will say ki sir it is 9%. You say why 9%? They say ki rate set by FBIL has increased. You say arey yaar, and you don't take a loan because so money has become dearer. So that is why we are following a contractionary monetary policy. ठीक है? Is it okay? Revise this 10 times. Your revision is required. When you will see MCQs in prelims, you will realize that this is what they ask. They ask all these things only. They ask in inflation, what would government do? Increase taxes, reduce taxes. What would government do in inflation? Increase taxes or reduce taxes? What? What will government do in inflation? Increase taxes or reduce taxes? Increase taxes, because government wants, inflation is happening because there is too much purchasing power with people. बहुत उड़ रहे हो. You are buying a lot of things, so we will take away taxes from you. We will take away your purchasing power from you. Then you will not be able to demand goods. Then demand will come down. Prices will automatically come down. Yes or no? Equilibrium. Remember, demand supply. Okay, all things are interrelated with each other. We are now in the heart of monetary policy. There are a lot of things which are to be covered in monetary policy, but I suspect one lecture more and we will cover monetary policy. Then we will go on to, we also have a separate session on or half a session on money supply, because that is also what is important. And then we have banking chapter, right? So a lot of exciting things coming your way. Please keep on revising. We'll stop here and I'll see you in the next lecture. If you have any doubt, you can ask me. But very important, most important part is that you should have your concepts crystal clear. If you have any doubt, you have to ask me. And if you read somewhere in the newspaper or in anywhere that you don't understand, then please share it with me and I will try my best to explain it to you. Always remember, in economics, 1 plus 1 is not 2. It is something else only. It is very abstract. So that is why your logic and your understanding is of utmost importance here. Okay? So I'll stop here. We'll stop here and I'll see you in the next lecture.